few weeks ago, I made the really dumb move of interrupting my compounding and selling my stock because of a miscalculation in our family accounts. It led me to not knowing if I was able to pay for my house. Hey kids, what do you want for Christmas?
You know, the usual stuff, light, food, just the normal stuff.
But in a stroke of luck, I've managed to sort the problem. Essentially, we've just managed to borrow money at 0%, and now I'm back in the market. So here today is my November update. Welcome back everyone, my name's Paul, I'm brand new to investing, and in 2019 I started a dividend reinvestment portfolio on Trading 212. Since then, I've used this channel to give regular updates on my progress and share things that I learn about investing along the way, whilst cutting out unnecessary doom and gloom bullshit.
How dare you!
This month has been tough. Over the last month, I've had to sell about £20,000 worth of investments. It's one of the main rules for investing. If there's a chance that I'll need the money in the next 5 years, it should not be in the portfolio.
Before you start to invest, ask yourself one question. When will I need to use this money? The stock market is a long-term investment. If you need to use the money anytime soon, you should not invest in stocks. This is money you're willing to put in the market and leave it there for 5, 10, 20, 30 years. That's the kind of money you can do well with. If you're worried about it, don't invest it.
But after some wrangling and negotiations, it turns out I didn't need to sell after all. And since I've sold, the market has rallied quite a bit. Pain. Yeah, it's frustrating. It really goes to show that being out of the market and attempting to time the market can be really painful. Rio Tinto, Raytheon, BAE, Microsoft, Lennar, Bristol Myers Squibb and Broadcom are all up significantly since I had sold. And had I had the choice, I would not have sold them at all. Still pain. But I need to move on. I've got to realize I can't control it and I need to get this money back in the market. I've added some of the funds back in so far, but currently I've still got about 13 grand that I still have left to deploy. I don't have any obvious ideas yet, but I'm open to suggestions in the comments below. If there are any dividend producing stocks that you think I should be aware of, please tell me. I'd love to be able to do some deep dives and figure out if I'm in a position to buy it myself. So the month of November has been tough, emotionally, not for the normal reasons of the stock market just going down. My portfolio currently stands at 55,000 with 42,000 of it currently invested. The total portfolio return stands at 10%, which is 1.5% behind the growth of my new benchmark, the FTSE All-World ETF from Vanguard. Again, this is almost completely down to the fact that 1/3 of my portfolio has been out of action for a month, and by my calculations, I'd be significantly ahead if I hadn't. Dividend income is still going well. No increase this month. It wasn't expected to, but the most significant dividends came from AT&T, UK Industrial REIT Tritex Big Box, and now the currently sold Bristol Myers Squibb, which gave me £19.97 as a lovely farewell gift. Legs. Killing me. Something that I've added new to my spreadsheet though is my Waze tracker, which tells me how much money I earn in dividends based on the average 1,950 hours worked in the UK per year. So it's working out my hourly wage basically. And according to these calculations, I make 46 pence per hour in dividend income. That'll get me somewhere in like Somalia, right? It ain't much. I'm not even totally sure it's honest. So that's my latest portfolio update. I'm still depositing on the same schedule, and you should expect lots of new stock reviews coming up because I need to figure out what I need to spend this cash on. As I make the decisions on these stocks in the new year, I'm going to be making videos. Right now though, I'm a little bit busy moving to different countries all the time, so you'll just have to bear with me.